Welcome back to the Commercial Real Estate Report with Chris Berg, brought to you by Abernathy Holdings. And today, we're doing a deep dive into self-storage, looking at those Q3 2024 earnings calls from Public Storage and Extra Space. We're going to go a little bit beyond the headlines, see what these reports might be telling us about where self-storage is heading in 2025.
Yeah, it's a really interesting time for self-storage. You've got this backdrop of a potential slowdown, but occupancy rates are holding strong, and it's pretty unusual for Q3 to see this kind of sustained occupancy. But both Public Storage and Extra Space are reporting some pretty solid numbers.
Yeah, it definitely makes you take notice.
You're right.
We've all heard the whispers about a softening market. I mean, even Extra Space's CEO, Joe Margolis, admitted that their year-over-year same-store revenue growth was only 0.4%, which doesn't exactly scream boom times, does it?
No, not really. And it raises some questions about what's really going on, beneath the surface. Is this sustained occupancy a sign of resilience? Or is it just a temporary blip before things start to cool down? I think to figure that out, we need to look at some of the other factors at play here.
Okay, let's do that. Let's unpack this. What are some of the other trends that are jumping out at you from these reports?
Well, one thing that immediately caught my eye was the impact of Hurricane Milton on Extra Space. They sustained significant damage, costs exceeding $10 million. 3 of their stores are still closed. And here's the kicker. These costs are actually excluded from their guidance.
Wow. Now, that's something you don't see every day. So they're saying that those hurricane costs would normally be added back to their core FFO,
Yeah.
which, by the way, is funds from operations, a key metric for REITs like these. So basically, their financial performance could look even weaker than it appears if you factor those costs back in.
Exactly. And, this raises a bigger question, I think. For everybody in the self-storage business, how are we going to adapt to these increasingly frequent and intense natural disasters?
Right.
Insurance costs are going to rise. Investment strategies need to account for this new reality, especially if you're in a region that's prone to these kinds of events.
Yeah, it's a risk factor.
Yeah.
That's becoming harder
Yeah.
and harder to ignore.
Yeah.
Okay, moving on. Let's talk about Extra Space's acquisition of Life Storage. The deal finally closed, but it sounds like integration hasn't been a walk in the park.
No, there have definitely been some bumps in the road. Take, for example, the $51.8 million impairment charge that Extra Space had to take on the Life Storage brand name. They're transitioning everything to a single brand, which is a massive undertaking, and this write-off just shows how complex and costly these mergers can be.
Yeah, think about it. This isn't just about slapping a new logo on a building.
Right.
You got different systems, different cultures,
Yeah.
potentially even different customer expectations to reconcile. And as we see here, those challenges got a real impact on the bottom line.
Absolutely. And for anyone in the self-storage business thinking about acquisitions or mergers, I think this is a cautionary tale. You really need to carefully consider those integration costs and potential challenges before diving in headfirst.
Solid advice. Now, another thing that caught my attention in the Extra Space call was their bridge loan portfolio. They originated $158.4 million in new loans and then turned around and sold off $179 million worth.
In Q3.
Yeah, that's a strategy worth unpacking. They refer to it as selling the A piece while retaining a residual interest. What that means is they're essentially offloading the less risky senior portion of the loan while holding on to a smaller, riskier piece.
Oh, so they get to reduce their exposure to potential defaults, but they still get to participate in some of the upside. If those loans perform well, it's a clever way to manage risk in a potentially volatile lending market. But it also makes you wonder if they're anticipating some turbulence ahead. It does raise some questions about their outlook on the lending market. And speaking of potential market shifts, there's another interesting trend emerging. In the Extra Space report, they added 63 stores to their third-party management platform in Q3 alone.
Wow. That's a significant number, and it really solidifies their position as the largest self-storage management company in the U.S. What do you make of this move? Is this just a land grab, or is this something deeper going on?
Well, on the surface, it looks like a strategic move to expand their footprint and capitalize on their management expertise. But it also makes you wonder if more self-storage owners are feeling the pressure of a more complex market, and they might be seeking out professional management to navigate those challenges and optimize their performance.
It's an intriguing trend to watch. And for those of you running your own self-storage facilities, it's worth asking yourself if you're equipped to handle the complexities of the market. Moving forward, maybe professional management.
It's something to consider. Yeah, it's definitely worth exploring, especially as we head into 2025. And that potential for increased competition and market volatility.
All right, so we've covered some of the big picture trends emerging from these earnings calls. Now let's zoom in and get granular with those regional performance breakdowns, both public storage and extra space. Provided a lot of detail on how different markets are performing, and I'm curious to hear your take on those numbers.
Yeah, that's where things get really interesting when you look at the performance. By metropolitan statistical area, or MSA, you start to see which markets are hot and which are cooling down. It's like a heat map for self-storage opportunities.
Sounds like we're about to get into the nitty-gritty. But first, a quick word from our sponsor, Abernathy Holdings. Welcome back to the Commercial Real Estate Report. All right, so we've got this map of the self-storage landscape. We're looking for those hot spots, the hidden gems. What did you see in those regional numbers that caught your eye?
Well, it's not all sunshine and rainbows, that's for sure. Some markets are definitely showing signs of softening demand and increased competition. For example, some of those tertiary markets in the Southeast seem to be struggling a bit.
Oh, interesting. What's happening there? Is it oversupply, or are there other factors at play?
You know, it's likely a combination of things. You've got new supply coming online in some of these smaller markets, and at the same time, demand might be softening a bit as population growth slows or economic conditions become less favorable. It's something to watch closely if you're operating in those areas.
Absolutely. And what about the impact of the Life Storage acquisition? We know Extra Space is now managing a lot of those properties. Are we seeing any noticeable shifts in those markets?
Yeah, it's still early days, but it's definitely worth keeping an eye on. Those markets where Life Storage had a strong presence are now under Extra Space's umbrella. And we're kind of seeing how their management strategies are playing out. For example, if you're in a market where both Extra Space and Life Storage were previously operating, you might see some changes in pricing amenities or even marketing approaches as they integrate those portfolios.
Yeah, makes sense. You've got a new player in town, even if it's under a familiar brand. Now, I'm curious about the West Coast. It's always been a strong market for self-storage, but with rising development costs and all the talk about those climate change regulations, is that picture changing at all?
The West Coast is definitely a region to watch closely. Extra Space specifically called out those rising development costs as a concern, particularly in California. Those costs are being driven by a number of factors. It all adds up to a much more challenging development environment.
So how are developers adapting to this new reality? Are they still building? Or are they shifting gears?
Well, they're not giving up on the West Coast entirely. But we are seeing some shifts in strategy. For example, instead of building brand new facilities from the ground up, they might be looking more at conversions or redevelopments of existing properties. That can be a more cost-effective way to add supply in those tight, expensive markets.
Interesting. So it's not just about finding a piece of land and throwing up a building anymore. You got to be more creative, more strategic in your approach. What about acquisitions? Are we still seeing a lot of activity on that front, or are those rising costs putting ag air on things?
Extra Space is still in acquisition mode, but they seem to be more selective now. They're not just buying anything they can get their hands on. They're being very strategic, focusing on markets with strong growth potential and favorable demographics. And they're also being mindful of those rising costs. They want to make sure they're getting a good return on their investment.
Makes sense. You can't just throw money at every opportunity. You've got to be disciplined and strategic in your approach. Now let's bring this back to our listeners. We've talked about these big picture trends, zoomed in on some specific regional dynamics. What does all of this mean for those of you in the self-storage trenches or thinking about getting in? What should you be focusing on as we head into 2025?
Well, I think the key takeaway here is that the self-storage sector is still fundamentally strong. People will always need places to store their stuff. And the demand drivers, like population growth and urbanization, remain intact. But we are entering a new phase, a period of more measured growth and increased competition. It's not just going to be a matter of building a storage facility and watching the money roll in like it might have been a few years ago.
Right. The easy money days might be over. So what's the new playbook? What do self-storage operators need to do to thrive in this more competitive environment?
Well, first and foremost, you need to be laser focused on your markets. Really understand the local dynamics, supply and demand, demographics, economic trends, and you need to be adaptable. Those who can adjust their strategies, their operations, even their offerings to meet the changing needs of the market. Those are the ones who will be successful.
It's all about being nimble, being able to pivot when necessary. What are some of the ways that self-storage owners can differentiate themselves from the competition. What can they do to stand out in a crowded market?
Well, there's the obvious stuff, of course. Excellent customer service is a must. Convenient locations, state-of-the-art security features, competitive pricing. Those are all table stakes in today's market. But I think it goes beyond that. We're seeing a trend toward more specialized services, like climate-controlled units for valuable items, or business storage solutions that are tailored to specific industries. It's not just about storing boxes anymore. It's about providing solutions that meet the unique needs of today's customers.
Right. It's about understanding your customers, knowing what they need, what they value, and then delivering on those expectations. Another thing I'm seeing is this emphasis on technology, online rentals, automated access control, even mobile apps that let you manage your unit from your phone. It's all about making the customer experience as seamless and convenient as possible.
Absolutely. Technology is a game changer in this industry, and those who embrace it will have a competitive edge. It's not just about attracting new customers either. It's about keeping those customers happy and engaged. Make it easy for them to do business with you, and they'll reward you with their loyalty.
Makes sense. And it's not just customers who are demanding more from technology. Self-storage operators are using it to streamline their operations, improve efficiency, and gain valuable insights into their business. It's a win-win for everyone involved.
Yeah, for sure. Another factor to consider is sustainability. Customers are increasingly concerned about the environmental impact of their choices, and self-storage facilities that demonstrate a commitment to sustainable practices are likely to appeal to a growing segment of the market.
Right. Think solar panels, energy-efficient lighting, rainwater harvesting. It's not just good for the planet, it's good for business too. It can lower your operating costs, enhance your brand image, attract environmentally conscious customers.
Yeah, it's a smart move all around. And it ties into this larger trend of social responsibility that we're seeing across all industries. Consumers want to support businesses that align with their values, and sustainability is a big part of that.
All right, so we've talked a lot about Extra Space, but we can't forget about Public Storage. The other 800-pound gorilla in the room. They didn't provide as much detail in their earnings call as Extra Space.
Yeah.
But there are still some interesting takeaways.
Yeah, one thing that jumps out at me is their lack of comparable figures to Extra Space's year-over-year same-store revenue growth of 0.4%. They didn't disclose this metric, which could be strategic, or maybe it's indicative of something else entirely.
It makes you wonder what they're not telling us. Maybe their growth is even slower than Extra Space's. Or maybe they're seeing some other challenges that they're not ready to discuss publicly. It's something to keep an eye on as more information becomes available.
Right. And remember, Public Storage has a vast portfolio of properties. They're a behemoth in the industry, so even small shifts in their performance can have ripple effects throughout the entire self-storage market. It's like watching a super tanker change course. It takes time, but when it happens, everyone feels the impact.
Definitely something to keep an eye on. Any other thoughts on Public Storage before we start to wrap things up?
Well, I think it's important to remember that Public Storage is known for their conservative approach. They're not as flashy as some of the other players, but they're consistently profitable, and they have a long track record of success. They're the steady Eddie of self-storage. You know what you're going to get with them.
They've weathered a lot of storms over the years, and they're still standing strong, so that's definitely reassuring for investors.
Exactly. And in a market that's becoming increasingly volatile, that kind of stability can be very attractive. People are looking for safe havens for their capital and Public Storage. With their size, their scale, and conservative approach, might just be that safe haven.
All right, so we've covered a lot of ground here. Strong occupancy, but signs of a potential slowdown. The impact of natural disasters, merger challenges, evolving customer expectations, the importance of technology and sustainability. It's a lot to digest.
It is, but it's all crucial information. For anyone involved in the self-storage industry, we're not just talking about numbers here. We're talking about understanding the forces shaping this market and positioning yourself for success in the years to come.
So what's the big picture takeaway? What should our listeners be focusing on as we head into 2025?
Well, I think the key is adaptability. The self-storage landscape is changing, and those who are flexible, innovative, and customer-focused will be the ones who thrive. Don't be afraid to experiment, to try new things, to challenge the status quo. The old playbook might not work anymore.
That's a great point. This isn't your grandfather's self-storage business anymore. It's dynamic, it's evolving, and it's ripe with opportunity for those who are willing to adapt. Now, before we go, I want to leave you with a final thought. Both Public Storage and Extra Space are facing increased competition. from new and existing storage facilities. This raises an important question for all of you out there. Will this lead to a price war? Or will the industry find ways to differentiate and maintain profitability? What's your prediction?
That's the million-dollar question, isn't it? It really boils down to the strategic choices. Facing self-storage operators, will they compete primarily on price, potentially squeezing their margins? Or will they find ways to offer a premium experience that justifies higher rates? You know, my instinct is that we'll probably see a combination of both. You'll always have those players going for the low-cost, high-volume approach. But I think the real winners, the ones who can really stand out from the crowd, will be the ones who can create a brand that resonates with customers, a brand that represents quality, convenience, maybe even a touch of luxury.
It makes sense. People are willing to pay a premium for a better experience, especially when it comes to something as important as storing their belongings. Think about it. If you're storing family heirlooms or sensitive business documents, you're not going to go with the cheapest option. You want peace of mind. You want to know your stuff is safe and well cared for.
Absolutely. It's about trust. And that's something. You can't build solely on price. It requires a commitment to customer service, a focus on quality, and a willingness to go the extra mile. And that's what I think we'll see more of in the self-storage industry moving forward. The companies that understand this, the companies that can build that kind of trust with their customers, those are the ones that will not only survive, but thrive in this increasingly competitive market.
Well said. It's a fascinating time to be in the self-storage industry. Challenges and opportunities abound. So to all of you out there, stay informed, stay adaptable, and keep an eye on those trends. We'll be back next week with another deep dive into the world of commercial real estate. Until then, thanks for listening.